This is Ben and Sally. Ben and Sally are looking to buy the home of their dreams. For them, it's a home on a golf course, large enough to host dinner parties and entertain, as well as accommodate visits from their children and grandchildren. They have both been retired for over 5 years and are living comfortably in their retirement. Their current home is paid off, and they have virtually no monthly bills to worry about beyond their cable and utility bills. Unfortunately, taking on a mortgage for this dream home they so badly desire would ultimately make their comfortable retirement much less comfortable. Luckily, a friend recommends that Ben and Sally speak with Jenny, a loan originator and reverse mortgage expert. After reviewing their entire financial plan, Jenny advises against depleting investment accounts or taking on loan payments in Ben and Sally's retirement years. Instead, Jenny recommends using the HECM for purchase, which would allow them to buy their dream home and still have no required monthly mortgage payment. Let's look at what Jenny has to work with and how she came up with that solution. Ben and Sally's current home is paid off. It is valued at $450,000 with no credit or property charge delinquencies. Their residual income is sufficient enough to keep them comfortable. Ben is 70 years old and Sally is 69. They want a larger home on a golf course and, like everyone, they do not want to have a mortgage payment, and they also want to leave their current assets untouched. After a few weeks of house hunting, they find their dream home with a purchase price of $625,500. Ben and Sally list their current home for sale and quickly find a buyer. Jenny then moves to use the HECM to purchase their dream home. Here is how it happens. Ben and Sally sell their home for $450,000. After realtor commissions and escrow charges, they are left with $420,000. The purchase price of their new home is $625,500. Using the HECM for purchase option, they receive $330,000 in HECM proceeds. They then use $295,500 cash from the sale of their home to complete the purchase of their new home. Ben and Sally now have their dream home plus roughly $124,000 left over to use for further retirement planning. To find out what a HECM can do for you or your clients, contact us today.